Hi everyone, I'm previewing the important things for traders to watch this week. I'm putting an extra emphasis on the DAX 30 index, while I'll also touch on upcoming earnings from Apple, Google and Facebook, and run down the highlights from the economic calendar. GKFX Cambodia presents the week ahead. Since we're talking about the stock market in Germany, it reminds me of a great German proverb. Everything has an end, only a sausage has two. This rally in the DAX index will have an end too, but I'll share why it might not happen yet in just a minute. By the way, if you liked my German proverb, please click the like button. It really helps us spread the word about these videos. I thought it extra relevant to talk about the DAX since we have a lot of German data out this week. We start with the IFO, where expectations are set to slip slightly in July, as well as US durable goods orders on Monday. There is Australian CPI, but the Fed rate decision will be the big one on Wednesday. On Thursday, there is a host of German data to monitor, including Q2 GDP, followed by preliminary US Q2 GDP. Finally, we round out the week with China PMIs, German retail sales and Eurozone Q2 GDP. Why the interest in the DAX, Rich, I hear you ask? Well, for me, there are three things that are really interesting here. One, the DAX just turned positive for 2020. Two, the €750 billion EU recovery fund was just agreed. And three, some big investors are calling for a rotation into Europe from the United States. So let's take those in order. The DAX was down 38% in March. Now it is positive for the year and within 5% of an all-time high. That's the fastest recovery ever. So some are saying we've come too far too fast. But I think what it really shows us is that there is still very strong demand for owning high quality companies. To me, that demand makes sense even with the pandemic, because negative interest rates in Europe make it unattractive to keep your money in a savings account. From an investing standpoint, the joint issuance of debt in Europe spreads the risk between member countries. The argument goes that overseas capital is now more likely to invest in Europe because strong economies like Germany are in effect bailing out weaker economies like Greece. So the DAX index should benefit since it has some of Europe's largest, most stable companies to invest in. Lastly, big asset management firms like BlackRock have said that Europe's better response to the pandemic and lower resulting rates of unemployment makes it a better place to invest than the United States. So they predict investors will rotate from the United States into Europe. Now, before I sign off for today, mark in your calendar that Facebook reports Q2 earnings after the bell on Wednesday, and Apple and Amazon post their Q2 results after the close on Thursday. Right, thanks everyone, best of luck trading and make sure to subscribe to our channel so you don't miss the next video.